Here is a question worth sitting with this morning. If two big assets are falling in the same market, on the same day, for the same reasons, why are their biggest holders doing the exact opposite thing? Because that is precisely what is happening right now, on Thursday the 6th of August, 2026. CoinDesk reported in the early hours today that XRP whales, meaning wallets holding very large balances, are still buying the dip. They have carried on accumulating through the token's fall from around $2.40 in January. Ether holders, by contrast, are showing what analysts call deeper capitulation. Capitulation is simply the point where holders stop hoping and start selling, taking the loss to make the pain stop. Same market, opposite behavior. That divergence is the story. The trigger is renewed inflation worry. Ether and Solana have both fallen by a similar amount as traders reprice how long interest rates stay high. Higher rates hurt speculative assets first, and crypto sits at the far end of that spectrum. Meanwhile, Bitcoin has gone quiet, stuck in a range even as Wall Street builds out a crypto market structure now measured in the trillions. That combination, institutions building while prices stall, is unusual. And the numbers behind XRP tell their own story. XRP has now traded below its all-time high for 378 consecutive days. That is more than a year underwater, and yet on-chain transaction activity has stayed high, which suggests the accumulation is real movement of coins, not just wallets sitting idle. The pain is not evenly spread, and leverage is why. One whale holding both Ether and XRP is reportedly sitting on losses of around $40.7 million on long positions, having dropped roughly $50 million in a single week. That is the crucial lesson. Being a whale does not protect you when you borrow to size up a bet. Spot buyers who accumulate slowly can wait out a drawdown for years. Leveraged buyers cannot, because the market only needs to move against them briefly to force the position closed. For ordinary holders, the practical effect today is a portfolio that looks ugly, a timeline full of people declaring crypto dead, and a genuine question about whether to add or step aside. Watch the whale ratio, the share of large transactions relative to total flow. It is closely tracked because it hints at whether big money is entering or exiting. Right now it points to XRP holders absorbing supply while Ether holders release it. Near term, that suggests XRP may find a floor sooner, simply because there is a persistent buyer underneath it. Ether needs its selling to exhaust first, and capitulation usually has to run its course before a base forms. Neither is a guarantee. If inflation data surprises to the upside again, both fall further. But the asymmetry in behavior is a real signal, not noise. Every dip separates conviction from tourism. What today's data actually shows is not that XRP is better than Ether, but that their holder bases are built differently, and behavior under stress reveals that faster than any price chart. Watch what large holders do, not what commentators say. And remember the whale who lost $50 million in a week. Direction is only half the trade, survival is the other half.